Here's something many people don't realize. You don't need an Investec private bank account to save with Investec. Their personal cash investments are available from 100,000 Rand and designed for capital preservation. In markets like these, having a low-risk cash component alongside equities is simply sensible, particularly if you're over 55.
The US is going to come out of this stronger. And over the last 1.5 years, if anything, besides the AR few stocks, the US market has actually become a little bit weaker. And I think this action is going to reverse what we have seen over the last couple of years.
That's South Africa's hottest money manager of the moment, 361's Cy Jacobs. More from him later. Good morning and welcome to BizNews Daybreak for Thursday, the 19th of March, 2026. I'm Alec Hogg, bringing you the news that matters. Overnight, the geopolitical landscape in the Middle East shifted once again with major implications for global energy markets. The Brent crude price, $111 a barrel right now. Here's a quick update from Bloomberg News Now.
The Israeli Air Force has struck targets in northern Iran for the first time since the war began, acting on intelligence from the Navy and the IDF. Meantime, Abu Dhabi says LNG operations have been halted after the interception of Iranian missiles targeting the Habshan gas facilities. And at the same time, Qatar has reported extensive damage at the complex housing the world's largest LNG export plant. Authorities say Ras Laffan Industrial City was hit by an Iranian missile, and this strike came just hours after Iran threatened energy facilities across the Gulf. That threat was issued after the U.S. and Israel struck the South Pars LNG field. Now, South Pars is jointly owned by Iran and Qatar. Qatar called the strike a dangerous and irresponsible step, and later Qatar expelled Iran's military and security attachés from the country. Meantime, President Trump reacted to the escalation. In a post on Truth Social, Trump said Israel attacked the South Pars LNG field out of anger for what has taken place in the Middle East. Trump also said Israel will not attack the facility again. And the president went on to say the U.S. knew nothing about the attack. Trump also warned Iran if it attacked Qatar LNG again, the U.S. would retaliate. Crude oil prices moved higher in New York trading. Brent crude, the global benchmark, picked up 3.8% to $107.38. Interestingly, West Texas Intermediate traded at a discount of $11 to Brent, with WTI finishing up just 0.1% to $96.32. Now, some traders speculated on whether the U.S. was intervening in the oil futures market. And then, during the electronic session, news out of Qatar sent WTI up by more than 4% to above $100. The U.S. has taken steps to curb turmoil in the energy market. Today, President Trump temporarily waived a shipping mandate to lower the cost of transporting energy goods around the U.S. The Fed left its key interest rate unchanged, and policymakers still expect just one rate cut this year. The Fed also acknowledged increased uncertainty due to war in the Middle East. Here is Fed Chair Jay Powell on the outlook for inflation.
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Now, Powell also said he has no plans to leave the Fed until the DOJ investigation of him and renovations of the Fed's headquarters is complete. Powell also said if a successor is not confirmed before his term as chair ends in May, he would serve as chair pro tempore. In business news, Micron Technology says it will need to spend heavily on production to meet demand for memory chips. And these remarks overshadowed a generally upbeat forecast. We got reaction from Matt Bryson, Managing Director for Equity Research at Wedbush Securities.
I think we still have some room to go. Memory is very much a supply-driven business. So it's not how much demand there's out there. It's can the vendors bring on enough supply to meet that demand? And because you have these long lead times for fabs, we don't really begin to see new supply coming on until next year. And it may even be 28 before Samsung, Micron, Hynix can catch up with all the demand from AI.
That is Matt Bryson from Wedbush Securities. HSBC Holdings is weighing a wave of deep job cuts over the coming years. We're told the bank is betting on AI to shrink its middle and back office. These changes could ultimately impact, we are told, around 20,000 jobs. That would be about 10% of HSBC's total workforce.
It's a complex and evolving situation. So what does this mean for investment markets and specifically for investors navigating these turbulent waters? Well, first, let's have a look at the numbers you need to know this morning from what happened last night on Wall Street. The Nasdaq and S&P 500 index both down about 1.33%, with pretty much 1.5% even higher for the major stocks, including the tech stocks. The rand also weaker, starts the day at 16 rand 94, heading ever closer to 17 against the US dollar. Hard to believe that we were at 15.5 before the war started. Gold down $4,860 an ounce, and Bitcoin took a knock. It's at 71,345 per Bitcoin this morning. That's a 4% decline. Of the local stocks, the one that really got hit hard, and it was a bit of a delayed reaction, was Prosus. It's a big stock for holders here in South Africa, makes the major component of pretty much all portfolios, given the high weighting that Prosus and Naspers have in South African portfolios. Prosus' 7.3% drop on the JSE yesterday was a reaction to a global assessment that companies which deliver food delivery companies, and Prosus has got a big stake in that field, will be hurt by the higher oil price. Well, staying on the global stage, we're seeing massive geopolitical realignments, and global entrepreneur Rob Hersov argued that the idea of a new multipolar world order, which was, I suppose, given a lot of airtime here in South Africa, perhaps for self-interest, is vastly overstated. At BNC 8 last week, Hersov pointed out that free societies driven by tech wealth are fundamentally stronger than autocratic regimes reliant on oil wealth. Here's the BizNews tribe's favorite commentator.
Oil built the 20th century. Silicon will shape the 21st century. And here's the final irony. Oil wealth empowered autocrats and kleptocrats. Kremlin, Iran, Venezuela. But silicon only thrives in free societies. So let me say it plainly. The multipolar fantasy is dying. Not because Russia, China, and Iran won't continue causing problems. They will. But they can't convert grievance into a superior order. BRICS is fundamentally weak. India is pulling out of BRICS. BRICS is no longer going to place America as the order. America is back. And let's bring it back to South Africa. If there was an Olympic event for geopolitical idiocy, the ANC would be on the podium, probably with a gold medal. They've alienated friends. They've done deals with countries that bring us no value, and they've turned away America. And as you heard yesterday, America will bring us so much money, so much opportunity, and the international markets. Even Mteto Nyati said to me yesterday, they're idiots, the ANC. We should be pushing on an open door with America. Moronic. South Africa needs the West more than the West needs South Africa. And the ANC thinks it can offend the West without paying a price. Guess what? That's fantasy. And their headache is coming. So let me zoom out. Trump will get a deal done at the end of this month. He will return to America with massive foreign policy successes, which will give him a much better chance for his domestic agenda in America and a much better chance in the midterms. I think it's 50-50 whether he can win the midterms or not, but the odds are getting better. And Russia can't save the ANC. China won't save the ANC. BRICS won't save the ANC. The ANC will be punished politically, economically, or both. So here's my final word. Trump and his allies are winning. Russia is weak. China is cracking. Iran has been sent back a century. And the fake news of BRICS taking over is not going to happen. America remains, by a large margin, the central power in the world system.
The need for Middle East peace, which Hersov mentions, is particularly acute for Saudi Arabia. According to the Financial Times, Saudi Crown Prince Mohammed bin Salman has drastically changed his approach towards Iran after a relatively warm relationship that followed a Chinese-brokered truce in 2023. Here's the FT's Ahmed Al Omran with FT News Briefing host Mark Filipino on why peace has become such a huge necessity, economically speaking, for the Saudi kingdom.
Over the past few years, Saudi Crown Prince Mohammed bin Salman completely changed his tune on Iran. He went from calling Iran's former supreme leader the, quote, new Hitler of the Middle East to wanting a truce between the two countries. But the Crown Prince's olive branch to Iran has not spared Saudi Arabia in the ongoing war. Here to discuss how the conflict is affecting the country is the FT's Ahmed Al Omran in Jeddah. Hi, Ahmed.
Hi, Mark.
So MBS has dramatically changed his stance on Iran since becoming crown prince. Why is that?
The circumstances have changed. When the crown prince first came to power, he saw that Iran was pursuing an expansionist agenda that was very worrying to him, and he wanted to stand up to that. And so he pursued a muscular, assertive foreign policy that sought to stand up to Iran and challenge its agenda in the region. But then as Saudi Arabia started to focus more and more on its economic reform program, there was a realization that that vision cannot be achieved unless there was peace and stability in the region. And so we saw a shift in approach towards Iran. Saudi and Iran signed this agreement brokered by China in 2023 to resume relations and restore diplomatic ties between the two. Over the last few days, we've seen more and more attacks on Saudi Arabia. We saw Iran target their major refinery on the Gulf in Ras Al Noura. And more recently, we have been seeing a lot of attempts to attack the vast Sheba oil field. And so the longer this goes on, the more risk there is to the Crown Prince's economic vision, because in order to attract foreign investors and tourists for all these projects that the country has spent billions to develop and build, they need stability and peace in the region. It's very hard to see how the economic project can succeed if the war continues and instability continues to dominate this region.
Yeah, so then I guess the question is, does MBS have any plan to keep his vision intact and keep foreign investors calm during this turbulent time?
Saudi Arabia and its Gulf neighbors find themselves in a very difficult position because they opposed this war before it started. They said they would not allow the U.S. to use their territory and their airspace to attack Iran. Yet they have ended up suffering the most. They worry that if the U.S. President Donald Trump suddenly decides to stop this war, they are left with an Iran that is more emboldened, more hardline, and will keep threatening them and maybe hold the Strait of Hormuz hostage over time. At the same time, they want this war to end so they can focus more on diversifying their economies and developing their countries. So there seems to be no good outcomes for them, and they are in a difficult position to try to see what's the way forward out of this.
Good news from Southern Africa. BizNews partner DCC Hotel Group showcases world-class hospitality across the region. We spotlight more than 100 carefully selected lodges supporting tourism, local communities, and conservation. Here in Hermanus, whale watching and coastal charm await. Your home for the BizNews Conference 2026.
So how do these shifting global sands impact your portfolio? As promised, here's a clip from Cy Jacobs, co-founder of 361 Asset Management, at the BizNews conference last week. He's been closely analyzing the conflict, actually stayed up until 2:30 a.m. the morning before his address to be sure that he caught the very latest developments. Jacobs is taking a contrarian stance. He predicts that the current Middle East tensions will not escalate into World War III. It's not in China's interest to go to war. And he expects the conflict to conclude sooner than the market anticipates. That'll have interesting consequences for stocks and indeed resource-heavy South Africa.
What South Africa's feeling right now is a whole lot of optimism. We've seen some great changes in South Africa. We had a massive energy crisis that seems to be, somewhat avoided. Obviously, the private sector has played a great role in that. We're starting to see major fix-up in Transnet. We're seeing a budget that seems to be more realistic and financially disciplined than the past. We're not seeing, since the GNU came into power, we're not seeing any ridiculous regulation being promulgated. Yes, there are some. In fact, we're seeing a dissolution potentially of NHR. So there are a lot of positives, I think, in South Africa. Obviously, the slowness of the economy concerns us. But I think what we've seen over the last 2 years, since the formation of the GNU, is that the South African market actually has done exceptionally well. As you know, markets are a predictor of the future. So I think a large number of investors who saw this happening and who saw a debasement of the dollar and everyone looking for alternatives outside of the US. And I think that also was a very interesting time in our markets. Before this strike, there was definitely a move to the left. There was a move that China and all its related proxies were becoming stronger. There were transactions in oil underway in Yuan and all other currencies, and the US was definitely in a position where it was slightly losing power to the rest of the world. And I think this Iranian strike actually changes that and actually shows that the strategic thinking of the US was actually far beyond many of its Eastern enemies, call them, or Eastern counterparts, where they became quite energy self-sufficient. They're a net exporter of oil. They developed their own oil. And yes, there are exports and imports, but they are a net exporter, where China has been very reliant on oil and obviously getting oil very cheaply. And I think this whole war has disrupted that in a very big way. And for us, what that really means is that the US is going to come out of this stronger. And over the last 1.5 years, if anything, the US market has, besides the AR few stocks, the US market has actually become a little bit weaker. You've seen global tech companies that used to trade on 30 and 40 multiples almost halve, the Microsofts, the Googles, etc., that aren't as highly rated as they used to be. And we've seen, I think, significant fears around, the dollar weakening, resources like gold getting stronger, PGMs, etc., which has been very good for South Africa. But I think in some way, people were being frightened by the US dollar potentially weakening further. And I think this action is going to reverse that, what we have seen over the last couple of years.
As Cy Jacobs noted, a global commodities boom would offer a silver lining for South Africa's resource-heavy economy. But to truly capitalize on any global tailwinds, the country must first fix its own house. Political scientist Prince Mashele delivered a blistering address at BNC 8 detailing exactly how to do that. He argues that South Africa has exhausted the dead ends of both white-only and black-only politics to save the country from its current state of political fragmentation and awful economic performance. Mashele has proposed a radical 10-point plan.
Since 1994, the blacks were so arrogant, giving the middle finger to the whites, thinking that they can do it alone. Now, the component that is arrogant among blacks now, it's only political criminals. The majority of blacks have now shifted. They want blacks and whites to do politics together. The only problem is that those who must lead the politics on the part of blacks and whites don't trust each other and they are resisting to do it. What does this politics look like? And I have distilled this thing very carefully down to detail. I'm now going to present to you, call it the mad Prince Mashele 10-point plan. How to fix South Africa. Point number 1, assemble an inclusive, ethical, competent, and a highly educated team of blacks and whites. That's the first thing you do. We have them in our society. I've actually prepared a list. We have them in our society. They are not in government. Government is a theater of scoundrels. So we must get those people to go into the political theater. And it's going to be a fight. And elbow out the scoundrels. Let the proper human beings of our country take over.
That powerful contribution from Prince Mashele closes out today's coverage, and that's a wrap for this edition of BizNews Daybreak. Thank you for starting your morning with us. Be sure to subscribe to our feed on Spotify, Apple Podcasts, or wherever you get your audio, so that way you never miss an episode. From the BizNews team, have a profitable and productive day. When it comes to savings, we spend a lot of time discussing returns and interest rates, but not enough time asking why we're saving in the first place. That's the thinking behind Investec's #What'sYourWhy campaign that's been running. If your goal is stability or peace of mind, their personal cash investment is accessible from 100,000 Rand, and you don't need to bank with them. Whatever your reason for saving, Investec understands that.